Hey, you have Patrick Findaro here, co-founder at Visa Franchise. In today's video, I'm going to go through something a little different. We asked our friends, my brother, Jack, who runs Vetted Biz, our data platform for franchises, to do a little study. And he brought in one of his analysts, Sophia, to collect a report on seeing how 25 different franchise metrics vary across the Visa franchise approved portfolio, which is about 60 franchise brands, with over 3,400 franchise brands that we have data on for our sister company Vetted Biz. We've been doing this more on an ad hoc basis, and now we've built this more into our process of looking at some of the key metrics, and there's many more actually than 25, but for today's video, we're gonna go through 25 key metrics you need to look at before you buy a franchise, particularly for the E-2 visa, as well as some other investor visa categories like the EB-5. So looking at 3,500 or so franchises that we have franchise disclosure documents from at least one of the last few years, if not, 7 of the last years, we have FDDs for every year. 80% of these are seeking franchisees. They're out there, they're marketing, they're open to receiving franchisees, as well as about 58% of the franchises in the marketplace disclose financials at the unit level for the franchisees. So in other words, they're sharing in their franchise disclosure document how much franchisees have made, usually top line revenue. They might go into some profit margin. Some of them will go month to month, how it scales up in terms of revenue. Other ones, it will be year over year. You have some franchises that will do pro formas, not based on the historic data, but more forward looking, but that's not as common. But I was quite surprised to learn that 42% of franchises out there outside the Visa franchise portfolio don't disclose financial information on the unit level economics, how much money franchisees are making. When we look at the 60 approved Visa franchise brands, 93% of them disclose unit level economics. And if they don't disclose in that M19, they better have a really good reason why they're not disclosing. And our clients need to validate with at least 5, 10 franchisees to really get that financial comfort. When we're looking at the founding year, the average for franchises we've approved 2003, over 20 years old, a little better than when you look at ones not approved by Visa franchise where it's 2005. The royalty fee is 6.9% for Visa franchise approved brands, where it's 6.4%, so 0.5%. Not a huge difference, but I think that could probably be accounted for. A lot of the service brands that we work with have a call office support where they're doing the lead generation and the booking for you, depending on the franchise brand. And then marketing fee, pretty similar, 1.8%, 2%. Investment range this is a big difference because we're not working with huge hotels. We work with very select restaurants and food concepts. So the investment range, the average minimum is 140 going up to 300K for the Visa franchise portfolio, where outside Visa franchise in that universe of 3,446 franchise brands, it's 919,000 up to $1.8 million. So a very big difference. The investment midpoint is about 219,000 for Visa franchise. The average for franchises outside the 60 is 1.4 million. That's the average. The median is less, but I would say investment midpoint for our Visa franchise clients is more like 100, 150K, but this shows the average midpoint, and there are some daycare centers that bring that average up. But most of our clients applying for the E-2 visa are more in that 100, 150K range. Of course, we do have clients that invest substantially more. Franchise fee, Visa franchise portfolio comes a little bit under 49,600. Total US locations, 178,000 compared to 168 outside the Visa franchise portfolio. Franchise concepts is also a little bigger. Corporate units is a little lower in the Visa franchise approved profile. Started offering franchises. The Visa franchise businesses have been offering franchises for 3 more years on average than other franchises. Job count is a little lower when we look at the self-reported job count when people are going to get an SBA loan of how many full-time jobs there are for Visa franchise. And again, part of it is the nature of the business. Most of our clients are seeking the E-2 visa. The job requirements minimal for that visa category. 11 is the average for full-time jobs. And then 1-year growth rate 40% and 3-year growth rate 118%, pretty in line with non-visa franchise concepts. The failure rate is better though. When you look at 1-year failure rate for visa franchise approved concepts at 5%, and then 13% for the 3-year failure rate. And there are concepts that we work with that it's 0% for 3 years, 0% when you look over a 5-year period. But that's a really important factor to consider when you're looking to open up a business. And that's a big reason why a lot of people go into the franchise path, because they believe it's safer. It can be safer if you select the right franchise brand, but just because you're going into a franchise doesn't mean that it's going to be safer than starting your own independent business. I like to look at the franchise for sale rate 1 year versus 3 years. So, over the last 3 years, what percent of the system got out and sold their business to other people? 13's not a bad number. It shows that there are people that are hopefully making money selling the franchise to other franchisees already in the system, or perhaps are selling to new franchisees that are entering in. Franchise payback period 4.4. I like to tell our clients that if you're going to work full time in the business, you should have a reasonable forecast to get your money back within 3 years. Of course, there are exceptions. Daycare centers that include the land and the real estate, for example, it's going to be a longer payback period. But if you're running a small service-based concept, you should aim to get your money back within a 3-year period. Our payback period per the Vetted Biz data was 4.4 years, and it was 8.4 for the other 3,400 plus franchises in the ecosystem. Gross sales 2022, 644,000. They dipped in 2023. Pretty similar dip compared to franchises outside the Visa franchise approved profile. It was at about 600K, and it was expected 2023 was a cooling off year for a lot of these industries. And then an important aspect I like to look at is the sales to investment ratio. So what's the average, gross sales, and then looking at the midpoint investment and how is that average number compared to different concepts. So it's 3.8, and then non-franchise businesses 3.6, so marginally better for Visa franchise concepts. But where Visa franchise concepts are significantly better is the resale value to investment. So if you invest $100,000, Visa franchise concepts on average, according to our colleagues at Visa Franchise, you can expect to resell that business for $220K. Once it's up, stable, you've been running it 3, 4, 5 years, you can expect a nice payout should you want to exit the business. So the sales to investment ratio of 3.8 is better for the Visa franchise portfolio, as well as the resale value to investment. We're looking here at 60 franchises in the Visa franchise. And I think that's even a little much. I'd like to trim a little bit of the fat there, where there's a universe of 3,446 concepts that have been seeking franchisees that have been franchising. 80% of those are currently seeking franchisees, but 3,400 plus that have been franchising and have been operating here in the United States. So that's 25 or so metrics that you should be looking at if you want to start a franchise business here in the United States. Whether you're moving from abroad, wherever you're coming from, those are some of the aspects that you should be looking at.